5, 4, 3, 2, 1. Happy New Year! Woo! Happy New Year, guys. Well, wait, it's Monday, the last Monday before New Year's. What's going on? This is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. And tonight, we are going to go over the most frequently asked questions, fourth quarter of 2021. So if you have mortgage questions tonight, we have mortgage answers. If it's your first time tuning in, do us a huge favor. Hit the subscribe or notification button so you're notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 9 p.m. and Tuesday night on Instagram. Also, this is an interactive channel, so ask a lot of questions. So if you have questions tonight and you don't want to get sold and you want to know how to prepare for 2022, please ask. But do me a huge favor. If I do answer your question, please like this video. All right, guys? So 2021 is about to come to an end. And I'm going to take the most frequently asked questions, put them out there right now, and answer for you. When I'm done answering the questions, if you have a mortgage question, I will do my best to get to it and to answer it. If I don't know the answer, I'll let you know. All right, guys? So hopefully you're having a great night. Let's get into it. You guys start working on New Year's resolution yet? Let me know below if you are working on your New Year's resolution or not. Yesterday, I worked on my calendar with my wife up until August. We typically work on our calendar up until August because September holidays start kicking in again, right? So we worked on our calendar, and then next couple of days, right before I think Thursday or Friday, we are going to set our New Year's resolution. Hope you guys are doing the same. But the big thing about setting New Year's resolution is work backwards. Find out the answer, which I'm going to help you guys out with today, and then work backwards on setting your New Year's resolution on how to get there. All right? So let's talk about the first frequently asked questions. Biden administration extends student loan repayment pause to May 1st, 2022. How is that going to affect the housing market? So if you have a student loan and you voted for Biden and you thought it was going to get canceled, guess what? It's not going to get canceled. Not picking a side. It's just not going to get canceled. You need to start making your payments at the end of January, but he extended it till May. How's it going to affect people out there? So if there's a payment, so when a lender runs your credit, it could be in forbearance or it can be in deferment. If they see a mortgage payment when they run your credit, that payment is added to your debt to income ratio. If it's in deferment or forbearance, whatever the balance is without a payment, they're going to times by 0.5%. So the average student loan nationwide is about $30,000. So 0.5% is 0.5. So you would add $150 a month to your debt to income ratio. But if your student loan is in income-based repayment, whatever the payment is on the credit report, they add that to your DTI. But if the payment says 0, you don't have to add 0.5%. You add 0. So if you're in income-based repayment, it says 0, you add nothing to your DTI. But if your student loan is in default, that is a different answer, okay? Typically, if it's in default, a lot of times conventional, you probably won't be able to pass a automated underwriting. And if you try to go with a government loan, most likely you're on a blacklist, right? And you probably can't get another government loan because your student loan has default. So default is different. But if it's in deferment or forbearance, like I said, they just add the payment. If there is a payment, even though you're in deferment or forbearance, they add that payment. And if you're in income-based repayment, it says 0, they hit you with 0. So it's not going to really stop people from buying a home. Hopefully that helps you out. So hopefully that answer was good. Second most frequently asked question. And I talked to my lawyer, Tim, shout out to you. He has a specific way I have to word this. All right. So you guys, I'm here to help you. Don't try to trick me here. Tricky. Is there a way around taxes on a $15,000 gift? What does this person mean? So if you receive gifts, right, money to buy a house or equity to buy a home, you do not pay taxes. But the person who gifts you the money, anything over $15,000 in 2021, I think it's $16,000 in 2022. So if you got money in 2021 and it's Under 15,000, you're safe. Anything over 15,000, that person has to pay tax. Okay, so that's standard law. There's no way around it. From what my tax person told me, and which you can look it up in the IRS tax code. This is not from my advice. Okay, let's get that straight. This is from what my tax person told me and what the IRS says. Let's pull up the link here from NerdWallet. There's something called the lifetime gift tax exclusion. That means the person, unless they're some huge baller shot caller, can gift up to 11.7 million in their lifetime and exclude and not pay taxes on it. But anything over 15,000, right? They have to put it on their tax returns, even though they don't pay any taxes on it. They still got to put it on their tax return. Why is that? Because they're tallying up to make sure you don't go over 11,700,000. Of course, in 2026, it's a little bit more, but up to 2026, they actually reduced it to, I think, 5 or 6 million. I can't remember. But if someone gave you more than 15 grand, tell them chill out. If they're going to give you more than 16 grand in 2022, make sure they reach out to the IRS or their tax person. Don't say, because this is what Min said, okay, I'm giving you this advice, but you got to talk to your tax person. It's called the lifetime gift tax exclusion, okay? 11,700,000. So they got a bunch of family members, a bunch of people they want to gift it to. As long as they keep it under 11,700,000, guess 700,000, they don't got to pay tax on that money. Right? Remember, I am not giving you tax advice. I'm just letting you know what's out there. It's up to you to talk to a professional who is licensed, who is willing to tell your donor, hey, it's Gucci. Okay, guys? Hopefully that helps you out.
Scooch over to the left.
Left? Where? Oh, left? Okay. Okay, so third question. Frequently asked questions, okay? Guys, if I brought you value, if these are valuable answers, do me a huge favor, hit the like button, all right? If I did answer your question, hit the share button. All right, guys? So let's talk about this. Lisa, what is it with Lisa? So I did a reel recently saying, how can you avoid property taxes for the rest of your life? Okay? I got a lot of love, but I got a lot of hate. I would want to love to hear more about the hate. So what is a Lisa? It's called life expectancy set aside. So it's a reverse mortgage, which allows you to use your equity to pay your property taxes and insurance. Of course, you need about 60% equity. So if I were you, you should buy a home before you turn 47. If homes appreciate 4% a year in 15 years, with the amount of money you pay down, with the appreciation in 15 years, you should have about 60% equity. But those who bought a home recently, you guys know in the 2021, we gained about 31% in equity. So people who are late bloomers who bought homes, they just got a little right? Little push up in equity. So if you have equity and you're over 62, and even if you have a balance on your home, with your balance and with they do a math for your property tax and insurance, you don't have to pay your mortgage and you don't have to pay your property tax insurance. The reverse mortgage will pay. Yes, your balance goes up. But if you have the money to keep paying your mortgage and paying your property taxes, go ahead and do so. A lot of people who just gave me a lot of hate, well, what happened to their heirs? So unless your heirs plan on taking care of you, you want to struggle so they can get a home free and clear, which makes no sense to me. I had a guy, I'm not going to say his name because I am still friends with him, but if he hears this story, I'm pretty sure he'll know it's me. This guy his mom lives in a home. It's her house. She can do a reverse mortgage. It would change her life in a heartbeat. But she is babysitting on the side just to cover her mortgage and her property taxes so that her son will not let her do the reverse because he wants the house free and clear. What do you think about that? Leave me a comment below. Let me know how you feel. Yes, if you are baller shot caller and you're over 62 and you can afford to pay your mortgage and you can afford to pay your property taxes, you don't need Lisa to come through. But as you guys know, Social Security is not enough. And some of us, when we get to retirement, Social Security might not even be there. It might be bankrupt. You have your 401k. You know in your 401k, when you retire, You got to pay ordinary income tax, not capital gains, long-term gain, but ordinary income tax on that money, and then pay your property tax insurance. So if you can do that, have at it. Yes, your balance will grow, but I feel like Lisa is there and it will be there for people who want to save that money. Okay. My parents are in a Lisa. Property taxes every year, about 6 grand. They make about 2,700 bucks combined on Social Security. 2,700 bucks, right? If they had to pay that 6 grand, that's 2 months of their income just to cover property taxes, right? So it's out there. That's what Elisa is. It's not for everybody, but it might be for someone you know over 62. Or if you bought a home, let's say you're a late bloomer, you bought your home in your mid 40s, early 50s. That Lisa might be able to bail you out when you might not have Social Security. With the way we are inflating money right now, the money you have, you might need to hold on to every dollar. So don't hate on the Lisa. But if you're a baller and you can afford not to get Lisa, mad props to you. All right, guys. Hopefully that helps you out. Next one. Next Q&A. With an S. Okay, guys. Facts with an S. Is it worth it to remove PMI on an FHA loan if the rate is lower than convention? Oh, guys, don't forget this that Lisa brought you value. Do me a favor, like this video, okay? Don't forget to share it with somebody that you know over 62. Is it worth it to remove PMI on an FHA loan if the rates is lower than the new conventional rate? This is what I think. Talk to a lender and see the numbers. So yes, your rate is lower, but that PMI is forever, which brings you no benefit. After 2021, which you'll hear me talk about in next week's how to file taxes as a homeowner, but after 2021, private mortgage insurance is not tax deductible. So even though you're saving money with that PMI, you might be paying more than going conventional with the higher rate. Yes, on a lower rate on FHA, you're attacking more principal than interest. But you just got to see the numbers for yourself and see what makes sense. Let's say your payment is higher, right? Or you're paying more into your principal and interest, but that money's going towards your principal and interest, not towards PMI, which is not tax deductible. Not all home equity line of credits, but there's a good amount of home equity line of credit. Let's say you have your FHA loan, you've had it for 10 years, and all of a sudden you need some cash to buy another property, or you need some cash to pay off bills or to renovate. A lot of seconds will not loan you money if your first has PMI. Not all, but a lot of banks do. And if things get tight and you need money, that is a guideline I think that will stick for more banks. Not right now, but it can be. But the only way for you to find out if it's worth it is to run the numbers. So there's no exact answer. If I had a 2.25 and I had PMI, I'd chill with my 2.25. If I had a 2.625, 2.75, and the rates are at 3.25, I might want to do it because my FHA PMI is 0.85, right? So if I got rid of it, even though I'm taking a higher rate, it might be worth it. But also, we don't know how high rates are going to go in 2022. Did you know if you have an FHA loan, you don't have to wait till you have 20% equity to refinance to get rid of PMI. You can do it with 5 to 10%. To find out, give us a call. 714-790-9697. Call and ask them, how do I get rid of PMI? I've had my home for 6 months, a year, 2 years. I don't have that 20%, but I don't want to wait for rates to get into the high 3s or low 4s. I want to do it now. Can I see the payment? All right? Tell them that Min sent you. All right, guys? Next question. Will rates go up in 2022? Unless this Omicron, which my boy Annie says here, is pretty the real deal, right? If Omicron sticks around, and if Uncle Joe and Aunt Kamala put heat on Jerome Powell, then he's probably gonna back off and not push for use his tools to allow rates to go up. That's if Omicron stays. If Omicron is like bigger than everyone's claiming it to be, or no president or vice president wants to be the one telling everyone, hey, we gotta get the rates back up. So if they put enough pressure, he might not do it. But most likely, after the Fed meeting, it looks like they're gonna do it. And how they're gonna do it. So right now, the Feds buy about 120 billion in securities, right? In bonds, in mortgage bonds, and in U.S. Treasury bonds. 120 billion. So when they buy all these bonds, right, or these securities, there's extra money floating around for people to loan out. When they stop buying it, There's less money to loan out. So when there's less money to loan out, just like anything, when there's less of something to sell, rates go up. So every month from December all the way to March, they're going to back off 30 billion. So by the end of March, there's going to be less available money to borrow at the end of March. That by default, they already started doing that. That by default will increase rates. But at the end of March, it's if people don't react well, if the economy doesn't spend to keep the economy circulating, then I don't see that they're going to raise the Fed rate, which is the next thing they do. So to slow down spending, but not to scare the crap out of people, right? They start raising the Fed rates. So the first sign, rates will go up because they're tapering right now. So at the end of March, you'll see rates slowly climbing. But when they raise the Fed rates, which they should be raising it in March or May, that's when you're going to start really feeling it. I feel we're going to end the year. I could be wrong. Like I said, Omicron come in, knock everybody out, right? Joe can come down from his helicopter, wake up, right, not fall down the steps, and tell people, hey, Jerome, pump your brakes with that. Pump your brakes with that, right? That can happen. But if they don't, if the government doesn't interfere in what Jerome is going to do, Jerome Powell, right? Rates should end probably in the high threes, maybe fours. I don't think fours, but when I gave rates a couple weeks ago, there was fours, but I think mid to high threes. All right, hopefully that helps you guys out. Next question. Do I use my money to pay off debt first or use the money for a down payment? What you should do, definitely reach out to a lender. Reach out to a lender and have them run the payments. Will you still qualify? Right? If you qualify, you might have to do some balancing because if you pay off all your debt and it takes you a couple of years to save a bigger down payment, that you might lose appreciation and that might cost you more. But then if you don't pay off that debt, you might not qualify for more. So talk to a lender, see some payments first, see what's realistic, then make a move. Just don't go out and wipe out that debt right away. Okay? Hopefully that helps you out. Next one. I don't have enough for a down payment. Should I use my 401k to buy a house? So, like I said, just like the first one, go through the payments. I have not seen anyone with 200 to 300 grand in their 401k, but I see people with 200 to 300 grand in equity all day long. So if you take out the money as a loan, the money still compounds if you take it as a loan. If you take it as a hardship, it's a little bit easier, but there's a lot of ramifications that come with it. So talk to a lender, see, and then talk to your custodian on your 401k. Find out what is your best move. Do you do it as a loan or hardship? But I'll tell you, every month you max out your 401k, right? Every year, it still doesn't compound as much as buying a home. But you got to see the numbers for yourself to believe it. But if you are buying in an area that doesn't grow in value significantly, it might not be worth buying a home. But you got to see the numbers first and make that decision. Hopefully that helps you out. Next one. Will prices go up in 2022? We did the numbers a couple weeks last week. I feel the change of payments is about 200 something bucks. I don't think it's going to stop prices from going up. It's just going to slow down the trajectory of prices going up. So I don't think 200 something bucks is going to stop a $600,000 person from buying a house. 500, no. Maybe a 200 or 300, but in the 5, 6, 7s, 8s, 9s, a million, $200, $300 is not going to make too big of a difference. So I still think prices are going to go up, but just at a modest rate, not how it has been in the last 24 months. Hopefully that helps you out. Next one. Last question. Guys, so this valuable information, if this was valuable information, please go ahead and let me know. Okay? So, should I buy an investment property before I buy my own home? You got to run the numbers. So if you don't own a home and you buy an investment, which I was corrected, I was wrong, you cannot use rental income until you own a property first. Okay? So if you buy your first property as a rental, you still have to qualify. You can't use rental income to qualify, right? When I'm wrong, I'm wrong. Gotta let people know. Okay? So let's get into it. So if you want to find out, is it worth buying a house first or not? So let's say you want to buy a house. I'm just throwing out a number. 600 grand, right? 600 grand, 5% down is $30,000. So you put 5% down, another 2% for closing costs, right? That's like 10 grand. So you put about $40,000 to buy a home. You got to see, does it make sense? Eventually the PMI will fall off. The equity you're going to gain, right? You're not paying rent and then having to float a mortgage if it comes in short. You just have to do the math. Is it worth buying a $600,000 home? Sorry, it's $12,000 in closing costs, right? A $600,000 home, 5% down, 30 grand, 12 grand in closing costs, right? So about $42,000. Is that worth it to you? Or is it worth you buying units? Okay, so we did the math here. So you look at, so let's look at here. I found a home, I found a duplex in Fresno, right? Yeah, switch it. Okay. So here's this duplex in Fresno, 310. Okay. 310, 4-bedroom, 2-bath. Each unit, it's a duplex, 2-bedroom, 1-bath. You just got to do the math. Let's say it averagely rents out for $1,000. So that's $2,000 a month. So if you buy a duplex, your minimal down as a rental, your minimal down payment is gonna be 25% down. If you buy owner occupied, that's however you want to buy it, you decide to buy. I'm just showing straight up 25% down. 310, right? Let's see, make sure it's 25% down. Okay. So 310 purchase price, 25% down. So you can put down that $42,000 and buy a home, not pay rent, and you'll probably have to pay a mortgage payment, which is a little bit pricier than rent. That's just being real. You might have other deductions. You just have to do the math, talk to a lender. The mortgage is $232,500. You know, closing cost $9,300. So you're out of pocket about, let's say, $86,000, maybe another 10 grand for making it look nice, right? About 96 grand. Let's say 100 grand. 100 grand to buy a duplex. And the total mortgage payment on your duplex with a rate of 3.875, here's an APR for all the little haterades out there, 4.214. Payments $1,419. So is it worth coming out of pocket for your duplex 100 grand, right? So let's say $2,000 minus 25% for up cost, so $1,500. So you're buying this duplex that comes up in value after, let's say, cost to maintain it. You have $1,500 a month. Your total rent's $1,419. So that's what, $80. So is it worth it to you to come out of pocket, right? About $60,000 more than buying a $600,000 home. You're going to pay more in your mortgage, or come out of pocket that 100 grand, right? Which is 60 grand more to make $80 a month. You might, you know, I'm cool with that because I'm going to make money as it appreciates and rent will continue to go up. You don't know until you run the numbers, and no one can tell you elsewise until you see the numbers. So that's why I'm a big advocate of run the numbers. Run the numbers so you can make that decision. If that thing rented for $3 grand, for sure, all day long, right? We just don't know. So here it says $1,000. So definitely, you got to do your homework. All right, do your homework before you pull the trigger. Remember, it's not that easy to unwind an escrow. All right, guys, let's get into it. Q&A.
Switch it.
Yeah.
We switch it. Anything else?
What up, Yvonne? What up, Drive New York? What up, Jolene? Manuel Soda. I'm warning, asking for a what?
Your face came off.
Okay. Okay, Manuel Soda. I'm warning, asking for a friend. When rates increase this year, does that mean values will drop in real estate? Of course, in your opinion, Deliza Wirt. So it all depends if. So we did the numbers. With the increase of rates, payments can change about $200. We just don't know the appetite. Someone who's buying a $500,000, $600,000, $700,000 home, will $200 a month make a lot of people back off? We don't know. Right now, there is a limited amount of properties out there for sale. But yes, if unemployment skyrockets, people who have jobs, right? Not people who got unemployed but they didn't own a home. If more homeowners got laid off, the market shifts. A lot can happen. If none of that happens and just rates went up $200, I don't think it's gonna cause prices to go down. But I feel it's slowing it down. So if you were flipping property, I would maybe pump your brakes, right? But if you were holding long term, you're in a fixed payment. You know, like I said, if something happens in the stock market, people lose all their jobs, things can happen. But if people don't lose their jobs and you're just basing on interest rates, I don't see prices going down. Slowing down, but not going down. Hopefully that helps you out. Leonardo, talking about refinancing out of FHA with less than 20% down. So if you have an FHA loan for about a year and a half, 2 years, you might have the 20% equity. If you don't, and you have, let's say, 7 or 8 or 9%, you can do a refinance. You can do something called single premium PMI, increase the loan amount. If you have 10% equity, it might cost you 1%. But that one, let's say you got a $500,000 loan. If you increase the rate by $5,000 to pay off your PMI, that's still cheaper than paying $400 a month for FHA PMI. Hopefully that helps you out. All right, Leonardo. What's going on? Hi, Dad. Hey, Jennifer. Drive DC, is cash out refi good for me? I bought my house in 2020 with a 2.65. Hopefully that's conventional. So far, we have about 160 grand in equity. Is cash out good option for us to invest in more real estate? Yes, definitely do that. Drive New York. You guys got to run the numbers. Before you pull out any cash, you might want to see what our home is selling for. What is it renting for? How much do you have to put down for it to be cash positive, right? The name of the game, unless you can withstand paying the difference in the home is not rent positive, right? You got to do the math. How much cash can you pull out to buy a property to at least break even so you build appreciation? Okay, hopefully that helps you out there. I would run the numbers, but I think you can do it. Do you recommend a manufactured home on its own land? Yes. If you buy a manufactured home that you own the land, I would definitely look into it. It's more affordable than a condo right now or single family home. Okay. Should I Alicia Navarro, should I pay points to buy? Oh, that was Oscar Brenda Guzman question. Alicia Navarro, should I pay points to buy down on a refi for a better monthly payment? Alicia, you want to see, typically, if you are going to buy points, it takes about 5 to 7 years to recoup that money, which means even though you're saving money, the amount of equity you're eating up, right? Make sure it's worth it. If you're not coming out of pocket and you're using equity, you want to look at your amortization schedule. See how much interest you're going to pay if you finance and you don't come out of pocket to cover buying down the rate. If you're coming out of pocket, see how long it takes to recover. Even though you're saving a couple $100, how long are you going to stay in the loan? If you're going to stay in it for 5, 7, or a longer period of time, it might be worth it. You got to see how long you plan on staying in the home and how much your interest is going to pay if you're going to finance buying down the rate. Hopefully that helps you out, Alicia. Guadalupe Gomez, I owe $153,000. Mortgage is $967 for my home, currently valued at $310. I make $6,500 before taxes. Plan to rent out my house for $1,500. Could I qualify for $400,000, 3.5%, 5% down? Guadalupe, that's a great question. I would need to look at your debts, but most likely you should be able to qualify. Another thing, Guadalupe, if your current home is at a location and your other home, if it's within 100, if your new home is going to be within 100 miles of your current property, right? You do not want to go FHA. If you go FHA, there's something called the 100-mile rule, which means you can't use rental income to help omit your current mortgage payment, right? To help cover the payment. You would have to qualify for your current mortgage payment, which is $967, and your new payment if you go FHA. If you go conventional, 5% down, you can use vacating rent. Hopefully that helps you out. Thank you, Alex, Brandon, Alejandra. She must really love your friend, his mom that is. Linda, Dishonette, very selfish. What's selfish? What's Lisa? I hope you understand. What up, Anthony? Lisa is good if you have county jobs that does not earn as. Linda, asking for a friend. I was told you can get conventional with defaulter student loans on Google Assets. So, what you guys can do? Yeah. Erica, question. I want to sell my home. I have an no, I know, but let me answer because I don't want to go back and forth. Okay, I'll answer your question just 1 second, Linda. I have to sell my house. I have an FHA loan. Can I buy again using FHA, or does it have to be conventional? If you sell your home FHA, you can buy again FHA. Hopefully that helps you out. Erica, Jimmy Vu Chang. I just recently bought a house. How long should I wait to refinance? Jimmy, if you bought a home, you can use the new appraised value after 6 months for rate and term, 12 months for cash out. Okay. One person tried to school me and say, oh, why are you playing this refi video? Everyone refied already. Well, not everybody, because even if they have the value to remove PMI from FHA to conventional, they can't even use the new value until after 6 months. All right. Hopefully that helps you out. Linda, You can get a conventional loan with default student loans. Conventional loans are not backed by the federal agency, so they don't require Caver's report. Is this true or false? Asking for a friend. So, Linda, yes, conventional loans, they don't care that you default on your student loans. But if you default on your student loans, when you run DU, desktop underwriting, or loan prospect, it probably won't like the fact that you just defaulted. If it's some default years ago, you're probably going to clear. If you defaulted within the last 7 years, most likely it's going to be on there. And most likely on conventional, unless you got some crazy DU or LP, most likely won't pass. Yes, conventional doesn't care, but most lenders sell to Fannie Mae and Freddie Mac. Unless that lender is willing to do a manual underwrite, then yes. But if they're willing to do a manual underwrite, go talk to a seller who's willing to take an offer on a manual underwrite. You and Dave Ramsey can kick it together and talk to them, and they'll let you know. All right. These manual underwrites, even though conventional doesn't allow, conventional is okay with it, the DU and LP won't pass. A lot of times, not saying all, there's a chance that can pass, but do you want to take that chance? Go to a lender, let them run your credit, let them run DU. If that there's a student loan on there and it's a high balance, the underwriter might make you pay some of that student loan off. Even though conventional's cool with it, doesn't mean the underwriter is going to be cool with it. Okay, you can still pass as a manual, but in a seller's market, the chance that you are going to get a manual underwrite approval offer accepted is very slim. Not saying it's impossible. All right, so Google is right, but the chances are that it's happening very slim. All right, hopefully that helps you out. Alex Miranda, hi man, do you think on down payment assistance programs that income limits will stay the same in 2022? I don't know. They haven't released it yet. Typically, with loan amount increase, they should increase income limits. Hopefully that helps you out, Alex. Can you explain down payment assistance? Jolene Sophia, can you explain down payment assistance? So let's say with us, say with me, down payment assistance. The assistant comes in 3 ways. The first way is a loan. It means you're going to get assistance for the down payment and closing costs. And then there is an interest on it. You have to pay it back. A lot of these loans have silent seconds, which means the interest doesn't affect the debt to income ratio, or you don't have to pay it off, or the interest until after you pay off your first loan, right? So there's a loan for down payment assistance. The second one is a grant, which means they give you the money. Typically, they will forgive the money right away, or you have to hold on to the loan for a certain period of time. Typically, grants will have higher interest rate. They're giving you the money, but they're making it on the rate. The only, from what I know, there are other programs, but the most popular common one that I can see is like the slayer of all down payment assistance when it comes to grants is going to be the NACA, right? It's just hard to get NACA offers accepted unless you deal with a NACA realtor and you work directly with NACA and that realtor knows how to work the seller. If you're going to do with a grant, go with a NACA. The other grants, it's just not worth it. You're actually paying more, okay? And the last one is equity sharing. A lot of cities, they provide it. They'll give you the closing cost, 20% down, the shirt off their back, but they own a portion of your equity when you sell or refinance. Those are the 3 popular down payment assistance styles. Everyone's going to have something a little different amongst all of them. They typically will follow FHA or conventional guidelines. And yes, except for NACA, the rest, they all charge you an origination point. Since you're taking the higher rate, because they're going to give you the money to borrow, since you're taking a higher rate to get the grant, since you're taking a higher rate or with the equity sharing, it's not as bad as the loan and the grant. All right. So hopefully that helps you out. Typically they'll follow FHA, conventional guidelines. Some will have income limits, some of them won't. Most popular one, Chinoya, does not have an income limit. A lot of them have credit requirements, and a lot of them have to be first-time home buyers. Not all. A lot of them where you can't own a home for the last 3 years. Hopefully that helps you out. That was like all in one. That's a whole live stream that I just squeezed into like 3 minutes. All right, because Jolene, I know you're always on, so I gotta give you that mad love back. Okay, is it worth buying down points? Grace, I think if it's your second or third home or fourth home, I think you should, because most likely you're not moving again. On your first home, unless you plan on keeping that loan for 5 to 7 years, I wouldn't bother doing it because you're going to refinance one more time. If you have an FHA loan, definitely don't do it because most likely you're going to refinance. All right, hopefully that helps you out. Run the numbers, Grace. Run the numbers, guys. So you can run your live. What's up, Marvin? How does down payment system work? I just explained it. Hello, Ralph from Garden Grove. Terry, what's going on, fam? James, little correlation between interest rates and home prices. So correlation. So right now, the way it typically works, rates go up, prices go down. Prices go up, rates go down. But we're in a very weird time. Rates are going up. That how prices don't dictate rates. The government dictates rates. So they dictate it during the pandemic by buying all these securities, right? Buying mortgage bonds and 10-year bonds and US bonds, right? They were flooding the market and buying up they were buying up the market. So if you were a bank, right, and the bank would come or the government would come and your buy up buy up your bond. So now you have free money to loan out. Well, the more money you have to loan out, the cheaper it is to borrow money. So say anything. If you have a million apples, cheaper when if you have 10 apples. Well, if the government stops buying these bonds now, right? Let's say they stop buying. It's like you have a credit card. No one's paying off your credit card anymore. So you have limited credit you can loan out. Because you have limited credit, the cost of borrowing money goes up. Well, we're in a weird time. Cost of borrowing money is going up, but our demand controls prices. And because we have a limited amount of inventory, I don't see prices going down. If rates go up and prices are only going to change by $200, you think $200 a month is going to stop a 5, 6, 7, 8, $9 million person? No. It might stop a 200,000, maybe 300, maybe 4, but 5, 6, 7, 8, 9, and a million, $200 is not going to stop. $200-$300 is not going to stop them. All right. Hopefully that helps you out. James Freeman, 1,800 homes now for sale in San Diego County. A normal market is around 12,000. He just gave an answer. Thanks a lot, James. 1,800 homes now for sale in San Diego County. Wow, a normal market has 12,000. Huge inventory problem as long as persistent prices will rise despite an increase in rates. James, everything I said, you just made it better. Thanks, James. Mad props to you. Guys, James a realtor, follow James Freeman. Guy Herrera, is 20% the best bet for a first-time home buyer? What do you mean by 20%? I wouldn't do 20%. If I bought a home, we bought our home, we put 10% down. I would not put 20% down. The difference of payment, first of all, the difference of payment between 5% down and 20% down, depending on purchase price, like in the 500,000 or 600,000, is about $500-$600. Why would I unload all my money, let's say on a $600,000 home, 30 grand out of pocket or 120 grand out of pocket to save $500 a month for a short period of time, right? Not worth it. Remember, for every $100,000, it's about $700 a month you're savings. So it's not too big of a difference. Okay. Claudia, currently have $400,000 conventional loan, 2.875. Should I refi $150K in equity? Claudia, if being the type of guy I am, I would tell you to leave your conventional loan alone and get an equity line of credit. All right? Hopefully that helps you out. Unless you are buying investment property and you're going to get that much money, I would, the reason why on investment, since you are going to buy investment, I would try to go with the lowest fixed rate possible with the cash out, but I don't know what you're using the money for, right? So if I know what you're using the money for, I can give you better advice. But I would look at an equity line of credit before you do a cash out. Jenny, credit scores above 700, down payment and closing costs saved. Only problem is that 1 year W-2 employment at this time. So, Jenny, if you've been a wage earner for more than 2 years, you're fine. You've been at one job for 1 year, same line of work or same field, you're fine. Okay? If you finish school and you only been working for a year, but you're using your diploma, you're fine. If you went from 1099 to W-2 in the same line of work, you're fine. Okay? Unless you haven't worked in years and all of a sudden you only have 1 year W-2, then you got to wait. Hopefully that helps you out, Jenny. When do you think is a good time to buy property in California ASAP or wait for NC? If you're going to hold on, get it now. It's not going to get cheaper. If I was a betting man, and you're looking about buying investment, I would look at Hemet. We looked out in Hemet, right, Andy? You might not love the area. It's about an hour and a half away from the beach, hour and a half away from the mountain, from LA and from Orange County, but it's affordable housing under $500,000. I love that area, right? Before that place starts getting out of control. You might want to look at Fresno. You might want to look at Kern County, but there are areas in California, especially investment property. Dude, there's 2 units and 3 units in Fresno for about $300,000, $400,000, $200,000 to $300,000, right? You might not, the rent might break even, but just hold on to it as you appreciate. Hopefully that helps you out. Thank you, Jolene. Baptista, which is better, apply and run your credit direct with the bank, or apply, run your credit with the broker and shop your profile? Baptista, I would take the latter. I would run my credit with a broker and then shop it. Brokers are gonna beat banks. Banks don't want that heat right now, right? They don't want to mess around with mortgages. They got other issues they're trying to deal with right now, right? They're trying to buy that crypto, so they don't worry about no mortgages. You go to any bank right now, brokers, small direct lenders, they're gonna smoke them, right? So unless you're gonna go with the mumbo jumbos, the jumbo loans, then yes, they want to keep your money. They're gonna give you a good deal. Okay. Lynn was good. Alex was good. Linda was good. Raphael, I just completed 1 year home ownership. How do I find out what my home value is worth now? Raphael, you can go on Redfin or Zillow. Don't look at Zillow's estimates. They're going to be wrong. Look on Redfin, look on Zillow, put a pin on your house, go out about half a mile. Try to find the most current comparable sales closest to the value of your home. Off of that, you can kind of eyeball what you think it's worth. All right? Don't go off of these estimates. Or reach out. Give us a call, 714-790-9697. All right? Hopefully it helps you out. Guy, is 20% down conventional loan the best for first-time home buyers? 800? No. Guy, do the math, right? Do the math. Let's do one. Let's go. Do you have time? Can we do this, Andy? All right. Let's do this for you guys, all right? Let's say 800 credit score here. 800 credit score. Right? Primary. Let's go. Let's do this really quick here. 800 credit score.
Credit score is at the top.
I know, 800. Right there.
You put the price,
no.
The purchase price.
What's the credit score? Okay, 800. Okay. All right. 800 credit score. Let's go. Okay, let's go 600,000. 6.
Credit score is at the very, very top.
Okay, I know. But I'm just go. Well, let's look at 600,000. Okay. See this guy, 600,000. 3.25. 20% down. What do we see here? 20% down. 20% down. By the way, 20% down and 5% down, same interest rate. Right? What's this? 26.98. 26.98. All right, guys. 20% down. You put down 120 grand. Let's not talk about closing costs. Just compare apples to apples, right? Closing costs should be similar. 120 grand for $2,700 a month. Right? Let's go 5% down. That's 30 grand. You're saving yourself $90,000. Let's say it with me, guys. $90,000. Okay? 800 FICO score. This person got good credit. See here. 5% down, 0.38 minus another 0.09, so 0.29. So 0.29. So 0.29. So you're going to pay minus 32.28. $530 a month. So $30,000 compared to $120 for $530 a month. But don't forget that mortgage insurance of $137, right? $503 minus $137. So in 2 years, 3 years, 3 years, right? Your payment difference is $366. But you came out of pocket 120 grand. You're a first-time home buyer. You got a long time to live. Put it in something that's going to make you more money. That home, you put that bigger down payment, the value still be the same. Yes, you will have more equity, but you put in 20% down on 5, it doesn't change the growth of the value. Okay? Hopefully that helps you out. Terry was good. I have been asked so much about I-10 for my clients. Always speak Spanish. What's the best approach to getting their offer accepted, competing with the I-10? Make sure you have an underwritten approval, Terry. If you got an underwritten approval and you can waive the loan approval, and all it is, hey, you can come in with the difference and waive the loan approval, you have a high chance. Okay? Tell me you have an underwritten approval. Make sure your agent's strong, right? The agents you're probably working with, they're solid. I know the house heroes. Got mad love for them. Gee, what's going on, Linda? If you get pre-approved, is it a for sure thing? No. If you get is there anything that can prevent it? So even if you get pre-approved or underwritten approved, if your profile changes, for example, you got underwritten approved or pre-approved, your credit report is good for 90 to 120 days. What happens? You went from an 800 to 680. That's going to change your approval. If they have to run your credit and all of a sudden you have this new whip, right? This new car, $700 payment. Let's say you were working 40 hours a week, you got pre-approved at that, or you got overtime, and all of a sudden you get into escrow. They don't see 40 hours a week on your paycheck stub. They see a decline in your bonus or overtime that can kill your approval. As long as you stay still and you don't change your profile, it would be hard not for that approval not to be the same. But if you make changes in your profile and who you are as a person, that can change your approval. Okay. But a pre-approval is not as good as an underwritten approval. In this purchase market where the sellers are putting a lot of heat on you, you want a underwritten approval, which means an underwriter approved the loan. DU was ran. So if you have if you defaulted on student loans, right? The DU already told the underwriter, and the underwriter has already conditioned out. You're like, Google says we're Gucci with student loans. It says so. This is what my FICO says. But the LO just goes off a pre-approval and doesn't run the DU, and the underwriter doesn't look at it. Let's say you run DU, you DU cleared. The underwriter might look at, dude, they defaulted 3 years ago on $30,000. I am not a betting man. I bet that underwriter will say, okay, I'll get you approval, but that student loan 30 racks, you got to pay that off. What happened? I've been pre-approved. Yes, by your LO, but if the underwriter doesn't underwrite the file, that approval doesn't really mean anything. Because at the end of the day, the owner of the bank or the lenders, they're going to go what the underwriter clears off, right? So these pre-approvals don't mean anything unless the underwriter has seen it. Hopefully that helps you out. Terry, also, anyone in a flood zone here in Garden Grove, I was just able to switch flood insurance zone from zone A to zone X. Let me know if I can help you. Thank you so much, Terry. CyberSelf, hello. Can I loan a car if I am planning to refi in January? If you get a car loan, even if another person makes a payment, if you go if you refi, I'm assuming you're going conventional. If you go FHA, unless you're the co on the car, you can't omit it. But you need 12 months of payments. So if you help someone co-sign for a car, right? They got to make payments for 12 months. On conventional, they need payments for 12 months. On FHA, payments for 12 months, and you have to be the co. You can't even be the main. All right. Hopefully that helps you out. But if you get a car loan, that car loan will affect your DTI if it's for you. All right. Hopefully that helps you out. All right, Guy, I appreciate it. Thank you so much. Go, guys. So hopefully that was helpful information. Was that helpful information? Leave a comment below. Let me know if it's helpful or not. Also, don't forget, save this video and share this video. If you're not subscribing by now, please hit that subscribe or notification button. Hi, Yosh, just joined. Does it matter whether you put 5% down or 20% to buy a house? It doesn't really matter. As long as you have the assets to come clear the difference, you should be good to go. But we show the payment on a $600,000 purchase. Difference between 5% down and 20% down, the difference of payment is $500. After 3 years, only $300. So I like the 5% down. That's just me. But if you got that type of money sitting around and you don't mind tying up 120 grand, compared to 30 grand to save $500 a month, it's up to you. All right. Hopefully that helps you out. Guys, we want to end all our episodes with our attitude is gratitude. Without you, there would be no me. So thank you guys so much. I appreciate everybody this year in 2021 who has followed us, who has referred us, who used us as your vendor to buy a house. Thank you guys so much. I wish you guys all a happy new year. Be safe. Hug your loved ones, kiss your loved ones, be grateful and thankful for everything that you got in 2021, and let's push for a great 2022. All right, guys, have a great